Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 36th COT report of 2017, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got cotton on top of a list with a 20% change in commercials positions. Same change size is visible in large speculators. And you can see that these changes are definitely much greater than average. We have seen a few times in the past, maybe this one over here back from 2016, which was similar to the one we're experiencing right now. And as you can see, there was a rally just before that, and then prices dropped. I'm not saying it's going to happen right now, but it is a bearish COT change signal after prices going much higher. Jumping to the 5-year chart, here we go. You can see that we are actually moving away from a relative bullish extreme because after reaching these significant bearish levels early this year, you can see that there was a pullback in traders' positions into the opposite side. We did not reach those really large extremes like the one I'm just showing you, but still it was an effective signal, as you can see. So the big question is, what's going to happen right now? Well, of course, we're in between the two extremes. So what I always say is look at the last major extreme. Of course, you can argue which one would that be. Would it be this close to all-time COT extreme, the bearish one, or the relative bullish one? I think it would be the bullish extreme that we should have our eyes on, but of course, in the background, we should not forget about the bearish one. So yeah, I'm not really giving you a precise answer to that question. I think that we have to start, going into some more detailed technical analysis and see support and resistance levels and what could be the case. I think the dynamics that we see in this rally suggest that this price could continue even longer, and of course the extreme is not against that. So maybe that's a better perspective to analyze a cotton market right now. Let's jump over to heating oil, where we have an 18% change in commercials positions. You can see that COT change signal over here. We have a 17% change in traders' positions in large speculators. And again, we're talking about pretty decent change sizes, so much greater than average. Here we have prices at, well, on this 5-year chart at all-time highs. I mean, 5 years highs. So again, this can be an effective signal, may push prices down in the near term. Jumping to the 5-year chart, you can see that we have reached, or going to reach, if this continues, of course, a significant bearish COT extreme level. So the last one was back over here. You can see it had an effect on prices. They could not continue their rise. There was a bit of a decline, and as prices declined, you can see that the extreme changed pretty rapidly and reached a bullish extreme that eventually pushed prices again higher. So we're just doing the opposite right now. Is this the point where it's going to turn? Of course, it's always hard to tell, but there's definitely some space left. We shouldn't be surprised if this extreme can continue and strengthen. Next market, lumber, with a 16% change in commercials positions. You can see that change size over here. Again, we're talking about a larger than average change size, although here we do see even greater changes in the past. I'm not saying it can't be an effective signal, especially when prices are actually at their highs or after a rally. This could push prices down Monday, Tuesday, Wednesday. Okay, jumping to the 5-year chart, you can see that we are moving towards bearish extreme levels. On this 5-year chart, you can still see a significant extreme that we're a little bit further away. But nevertheless, you can see the relative bearish extremes on this chart that do affect prices similarly, and this may actually reach a point that can signal us a top in the market. Let's move on and have a look at large speculators COT Extreme. And start off with the euro, where we have a 330 report extreme in large speculators, and that can be seen over here. Okay, so it means that for more than 5.5 years, or almost 6 years, we have not seen such an extreme. It is a bearish extreme. We're not surprised to see that at such price levels, and suggests that prices should eventually turn down again. Is this the point when we reach the top? That's of course hard to tell. The extreme is capable of widening to even greater levels, that's for sure. Rough rice, our next market, with a 311 report extreme in large speculators positions. That extreme can be seen over here. Again, we are talking about a decent bearish extreme, and at least for large speculators, we can't see anything as significant on the 5-year chart. And for commercials, the same thing can apply with a 304 report extreme. So this is a bearish extreme, and suggests that prices may start to halt in this rally, and could actually turn to negative territories. And last but not least, let's analyze the Mexican peso. Jumping to the 5-year chart, here we go. 222 report extreme with large speculators. You can see that we have seen even greater extremes back in 2013, even 2012. So these were these bearish extremes which actually coincide with the top on this 5-year chart. So you can see prices have pretty gradually declined from there. And now we've reached a bottom back over here early this year, which was signaled with this bullish extreme. Prices have gone higher, and as they did, the extreme changed towards the bearish side of the market. Is this enough for us? It's hard to tell, but it does signal a bearish turn in the market, that's for sure. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.